first part, we discussed the differences between property and shares as an investment for the man in the street, and I told you of a number of difficulties that I thought property had. First of all, you need great lump sums to get into the property market, and in the share market you can just go in with as little as 5,000 Rand. Secondly, the dealing costs in the property market are much higher. Thirdly, property of course means that you must have tenants if you want to get rent, and tenants mean difficulties or trouble. Also, property is much more difficult to sell. It will take you weeks and months to sell a house, whereas shares can be sold in a few seconds and the money in your bank in 5 days. So those are the difficulties that property has. Besides which, I always say, if you want to invest in property, why not buy shares in a good property company? That way you have the flexibility of the share market and you have whatever growth there is in property. So I hope I've been successful in convincing you that property is perhaps not as good an investment as the share market. I mean, the house that you live in is always a good investment, because you are the tenant, you won't mess the place up, you'll look after it nicely and you'll pay the rent, right? You have no choice. But when you seek to buy the place next door and rent it out, you may be asking for trouble. Now let us spend some time considering the various different ways that you could go into the share market. You could go in through a pension fund. You probably already are doing that. But there's not a lot you can do about that. You have no access to that capital. But you could also buy an endowment or investment insurance policy. That's another way of going into the share market. A third way would be to invest in unit trusts. So let's consider some of these options. Insurance companies all work in more or less the same way. They gather small amounts of money from hundreds of thousands or even millions of individuals every month. They pool that money into great lump sums, which they then place on the JSE. On the JSE, they can make 30, 40, 50% per annum, and when you turn 65 or whatever the date is on your policy, they pay your money back plus maybe 12% compound if you're lucky. With the difference, they can build a new Liberty Life building in Braamfontein, isn't that right? So I'm not a big fan of insurance policies, mostly because they are very bad on performance. And there's a great difficulty with insurance policies of this type, investment or endowment insurance policies. And that is that they're extremely difficult to get out of. You have to fill in all sorts of forms, and there are great penalties that you have to pay if you want to get out of your endowment insurance policy. I can sell my shares in a few seconds and the money's in my bank in 5 days, as I mentioned earlier. So insurance is difficult. I know a chap who bought 1,000 Rands worth of Liberty Life shares when they were first offered to the public many years ago by Donnie Gordon. Those shares are today worth well over 10 million Rand, excluding the dividends that he's got. And I don't know of any insurance policy offered by any insurance company anywhere that has come even remotely close to that. In fact, I don't know of anyone who's become rich by buying endowment insurance. I know a few people who've become rich by selling it, but I've never met anyone who became rich by buying it. And of course you must bear in mind here that I'm talking about endowment insurance, not term insurance. Term insurance is the insurance that you have that covers your life, or protects you against disability, or covers the contents of your house or your motor car. Now that insurance, in my opinion, is the proper function of insurance, and you should have that to the extent that you cannot self-insure. You should have that type of insurance. But when your insurance policy becomes a savings vehicle, an investment vehicle, I see no merit in that at all. Now what about unit trusts? I'm sure some of you are chipping a little bit of money into the unit trusts every month. Now I have to ask you why you're doing that. Why are you doing that? Perhaps because you think that the unit trusts have a group of managers who are very much better qualified than you are to perform in the share market with your money. Let's test that idea. 4 out of 5 unit trusts in South Africa and worldwide underperform the indexes of the sectors in which they participate. Now an index is an average. So I have to ask you this question. Why are you paying somebody a fee in order for them to underperform an average? I mean, this you could do for yourself. Theoretically, the chimpanzee in the Pretoria Zoo could do it better. So I have to ask you that question again. Why are you paying somebody to underperform an average? Think about that. Think about that. I mean, if you chose your shares completely at random, let's say you took the price page of the newspaper, you stuck it on the wall, and you took the darts and you threw them, and where they landed, that's what you bought. Then your performance should be more or less in line with that index. That must be true because the index is an average of the shares from which you are selecting. So I cannot see any point in paying somebody with an 80% chance of underperforming an index. So that's insurance and unit trusts. As far as I'm concerned, both of them are lousy investments and you should stay away from them. You see, the simple truth is that nobody cares about your money except you. I don't care about your money. I care about my money. You care about your money. So therefore, you should take control of it. You should spend the time, the effort, to try and understand the art of investment, the art of selecting the right shares and timing your transactions for the best profit. And I can promise you that if you spend a little time every day, maybe half an hour every day, studying your goal of achieving financial independence, your goal of becoming rich from shares, you will certainly do that over time. And I can tell you also that half hour a day that you spend on the stock market, you will make more money in that half hour than you do in the rest of your day put together. So think about that. Think about that very, very carefully.